Hi everyone, I'm Paul and welcome to my market update for the 28th of December 2022, and this is going to be my last one for this year. There was no Santa rally again this year, so no Christmas presents for risk assets. After some slightly better than expected inflation data and another 50 basis point rise by the Fed, markets really haven't done much, and we've seen volumes and volatility essentially evaporate across risk assets. Given the lack of data-driven news events and most trading participants being away from their screens over this period, I don't think this is going to change very much until probably mid-January. So let's take one more look at the charts and see where we ended up for 2022. But before we do, it would be great if you could help me out by liking this video, as that'll help more people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then sign up for my free weekly newsletter and Discord. There's a link in the description and it'd be really great to see you there. Now let's jump into today's video. So the first chart we're going to look at today is the DXY or the DXY, which is the US dollar currency index. And we're going to look at the monthly chart to start, just to get a bit of context before we zoom in. And so looking at the monthly chart, you can see this run that we've had since late 2020 all the way down here, sort of sub 90, and we've just run, and you can see how strong this rally's been. I've talked about this in a lot of my previous market updates, and you can see we traded right up into this bearish fair value gap right up here. You know, we got up to a high of about 114, so just under 115 before we painted this swing high, and then we've started to trade lower. Now if we zoom in a bit closer, you can see we've broken this sell side liquidity here. There's actually a swing low pattern just there, and you can see this is broken market structure on the monthly chart. So the reason why I look at this swing low here is this is the swing low that we had before. We took the buy side liquidity up here, and then the market has reversed down. So this has been a really strong move over the last few months of the year. Now if we zoom into our weekly chart, we start to get a little bit more context. So this is that swing high up here that we painted on the monthly chart, and you can just see how neatly we've traded inside that imbalance, that bearish fair value gap here. So you can see we've wicked in and out of it, but the bodies have largely respected that zone once we traded into it. And then you can see once we closed out, you know, the market started to fall away. We've obviously wicked back into it, but the market direction pretty much since painting that swing high has been downwards. And you can see we broke market structure on this swing low here. Now the reason why I like this swing low again is this is the swing low that we painted prior to taking the liquidity. So there's obviously swing lows here and here, which could be considered a break of market structure, but this is a more powerful break because this is the swing low that we painted prior to taking the liquidity to the upside. So the market's traded down. You can see as we've broken market structure here, we've gotten that really strong displacement. So we've painted another bearish fair value gap on the way down here. You can see the market's traded back up into it a little bit, and then we've started to drift lower. We've taken out the sell side liquidity here at this swing low, and then again here, we didn't trade quite down into this bullish fair value gap down here on the weekly, but we have this sort of order block here, these two candles. So these continuous down close candles is a order block because it's just before this imbalance here. So you can see this whole zone is sort of acting as support at the moment, and you can see we've wicked into it. So these are weekly charts, remember, we've wicked into it, but the market's largely sort of respected this zone. And as we zoom into the daily, you'll see we sort of start to lose a little bit of context because the market's just drifted sideways as we've come into this holiday season. So zooming in now to the daily, you can see this sort of sideways chop that I was just talking about. So we've drifted again into this bullish fair value gap, which we have both on the weekly and here on the daily as well, after we've taken out this sell side liquidity. So generally, now that we've taken the liquidity to the downside, so we've taken out this sell side liquidity, you'd expect we'd be looking for liquidity higher, and the most likely draw in liquidity that I can see at the moment is these relative equal highs up here. So this is a real sort of line in the sand, if you like, for the DXY. We're really going to find out here if we're going to have a rally on the DXY, which obviously means that it's going to be risk off, or are we going to lose this level, continue to see this downside momentum on the DXY, and then conversely a rally or a risk on environment in risk assets. For my mind, we just need to see more price action before we can make any sort of definitive conclusions on the Dixie at the moment. Certainly as a first sort of point of interest, we'd want to see if we can take out this buy side liquidity, relative equal highs here. That would also create a break in market structure on the daily chart, and that may lead to high prices, and we could certainly trade up into this bearish fair value gap up here higher. But from my perspective, I think the Dixie's a little bit hard to read at the moment. In terms of looking at it to try and get confluence on risk assets is a little bit difficult. So I think we just need to wait and see some more price action before we can make any definitive conclusions. So the next chart we're going to look at is the ES or the S&P 500, and we're looking at the daily chart. Now, if we have a look back to mid-October, you can see this is where we had the low down here. So we took out the sell side liquidity, we had one more final dive, and then the markets rallied really strongly from there. So you can see we have this swing high here. So after taking out the liquidity, we broke market structure here, and then the markets rallied really strongly from that point right up into this bearish fair value gap just here. So you can see once we trade into it, the market's hung around this level. It's consolidated around here, although there's been some pretty nasty swings here. So if you were trading in this period, it would have been quite difficult. I think it potentially would have caught a lot of people out because they would have been anticipating a continuation of this rally. Obviously peak just here, we didn't get that. It's traded all the way back down here under 3,900, and then we've just ripped higher again all the way up to this point here, taking out the buy side liquidity before trading lower. So I think that would have been a really difficult period to trade just in there, and would have wrong-footed, I think, a lot of traders in that period. So this is what I shared with my Discord channel. So I anticipated this would happen. I didn't really think it would happen like this. I wasn't expecting a big intraday move, but I was expecting this level to be retested, so the buy side liquidity would be taken there again before we trade lower. And so that's exactly what happened. You can see we got this big displacement just here. We broke market structure. So again, this swing low is important because that's the swing low we painted prior to taking out the liquidity here. You can see once we broke that, the market's traded lower. We traded right through this bullish imbalance here. We've filled in all that efficiency, traded down into this order block here, and now we've consolidated, like we did on the Dixie. So as we've come into this holiday period, we've seen more consolidation. Again, volumes are quite thin, so it's not unusual to see markets bounce around in this period. And what I'd be anticipating from here is to see the S&P trade back up into this imbalance, up between sort of, mid 3,900s all the way up to 4,000 potentially, before we trade back lower and attack this sell side liquidity, relative equal lows here. Now, normally I'd be looking to the Dixie for confluence. As I mentioned in that part of the video, I'm not really feeling that confidence on my analysis with the Dixie at the moment, so I don't have great confluence there. But if I look at the S&P just standalone, that's sort of what I see on the charts, and that's sort of what I'd be expecting. And as you'd see in the analysis of the S&P, it's been trading sort of pretty technically, so I don't expect any sort of deviation of that at the moment. And so I wouldn't be surprised that we see high prices in the short term before we have a continuation of that longer term trend, and price, as I said, start to attack these relative equal lows down here. And so the last chart we're going to look at today is Bitcoin on the daily chart. And I just zoomed right out just so we can just get, take in how painful the last year for Bitcoin traders has been. Obviously, if you've been trading the short side, you've had a great time. But for anyone who's a long-term investor, it's been pretty punishing. And if we zoom in, you can just see basically what the price has been doing. It's just fallen off and then consolidated, fallen off and consolidated. And so if we zoom into this region here, this is sort of what I was expecting to happen. We had this big sell-off. We started to consolidate here. We took out the sell side liquidity here, and so I was expecting price to gravitate up into this bearish fair value gap on the daily chart up here. We didn't quite get that. You can see we sort of traded up into this level. We painted this swing high here, and then we had the market fall away. You can see we've broken market structure there. We've painted another fair value gap as we've created this displacement lower, and the market just sort of traded into it, but just drifted sideways as we've entered this holiday period. So it's been very quiet in Bitcoin. Volumes are at historic lows. I think back to sort of early 2020 levels. And we've also had obviously no volatility trading in this really tight range over this period. So this is what I expected to happen. We didn't quite get this. I anticipated the same thing on Ethereum, and Ethereum actually did trade into this zone before trading lower. So we got that expected move in Ethereum, but didn't really get it in Bitcoin. And you can see now we've just sort of consolidated to the sides. Now, I'd still expect that we might trade a little bit higher into this bearish fair value gap before we start to, attack the sell side liquidity here and potentially here. I think we're really close to, the end of this sort of capitulation period, if you like, in Bitcoin before we start to, find some support. If I zoom out to the weekly chart where I'm sort of looking at that, at these levels, it's sort of just around here, around this sort of 10,000 mark, just around here. So I'd expect we've still got to take out all of this inefficiency that we had, prior to this move just here. So we have this sort of down close here. And this is where I expect we'll find support. You can see this is where the market rallied from. It's all originated from that. And so all of this inefficiency needs to be rebalanced. So expecting we'll see, one leg down, and that hopefully will be the final flush before we have, some consolidation, some accumulation take place. And then we'll just sort of have to see what happens with the broader macro environment. Obviously, Bitcoin is a risk asset, and so it's going to move in line with other risk assets. But I think that's where we're going to, really see long-term buyers start to step back into the market again, and we'll see, an extended accumulation phase at that level. Thanks for watching my final market update for 2022. I hope that you enjoyed it, and I hope to help you to navigate what I think is a really tricky time in markets. If you did, it would be great if you could like it, because that'll help other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching. I hope you've had a happy and safe holidays, and I can't wait to see you in the next video.